got like a 90% win rate there or something crazy. The returns are, 20, 30, 40%. So still really good, juicy returns with a much higher win rate. That would be defensive. And a lot of times if we're doing a debit spread, that would mean placing the debit spread in the money. Whereas on speculative, that would be placing it out of the money where we need a move on the stock to hit. So hopefully that made sense. And if that didn't make sense, let me know.
I think it did. Before you get into what you were planning, I know there were some questions. I don't know if Nate's going to be here, but I know there were some questions about the trade that got posted on the QQQ.
Automated options.
I don't know if you saw it or not.
I saw.
And I don't know exactly what the problem was, but everybody
I am not sure.
Seemed off. That says automatic options trade.
Let me check. Automated options. This is Nate's.
Yeah.
312. Sorry, I don't want to give the trade away here, but I'll take a look at it.
Yeah.
And I will let the team know if there's any. 312. Sorry. Just give me a second, guys.
Yeah. You mean you don't know all of Nate's trades?
Yeah. Yeah, I'm not sure on that one.
Nobody was real specific about in what way it was off. I don't know if anybody wants to chime in, but
pricing is what I'll ping the team and Nate and let them know.
Yeah, just look for an update. Just look for an update to get posted and see if Nate or any of the trade true it up.
All right, I just let Nate know.
All right, cool.
So he'll take a look at that and let me know back. And then let all the members know too.
All right, cool. I'll give you the screen, let you do your thing.
Sweet. Entire screen. All righty. Let's see. How do we look? Let me try my new fancy presenter view. See if it.
I just did it.
Oh, cool. You're already on top of it. And then I feel like if you toggle the chat over, it should look pretty big for you guys. All right. Today or this afternoon, we've got 24 minutes till the markets close. No earnings, nothing crazy. We got Trump and Putin talking right now. Have not been able to tune into that. But I did. I got to go find my watch list I made for you guys. I'm going to post this in the chat so you know the tickers we're going to talk about. All right. Today, I do want to talk about some opportunities in the stock market. So let me just give you guys a brief overview of where I see things right now. As you know, I told you August tends to be more volatile in September as well. I said the markets are probably going to make new all-time highs in August, but they're also probably going to make a 5% dump. I don't have a crystal ball. I can't guarantee that, but that's my personal take and outlook on where stocks are right now. So you can see we've made a massive run-up since April, which hopefully you were paying attention back then. We've been crushing it along the way. Not every trade works, but been doing quite well. However, we're getting sort of to a toppy range here into what can be a seasonally rocky period. So we've seen things like the VIX, which is our volatility index. Let me just show you since April, get fairly complacent. Now, keep in mind, this is very extreme, but below 20, we're kind of in a complacent environment. Below 15 is a kind of a red flag or a yellow caution flag, I should say, for me, where, all right, maybe things are getting a little too good right now. So VIX is just now popping up to 15. He's at 14.99. So in my opinion, it's just not a great time to be buying all of these stocks that have been killing it. And again, I'm not selling them. Like I have Meta, one of my biggest positions. I'm not selling it, but I would not be surprised to see a pullback. GV, we're already sort of seeing a pullback. These are some of my biggest stock holdings right now. However, with that said, there are some forces that tend to happen outside of just overall market conditions where individual stocks can trend higher or lower outside of market conditions. And for what I'm going to talk about today, specifically, we're going to look for potential gap fills. What this really means is when there's an overcorrection in a stock or I'm trying to look for the right word, But basically, in a move too big one way or the other, we'll get what looks like this big gap here. This was on Amazon earnings. However, you will notice, not all the time, again, to be clear, but a lot of the times when you get a big gap and then the markets then close above that price of the gap. So you can see here, Amazon tanked on earnings. Next day, high price was 220. A couple days later, closed above 220. Stocks to tend to go fill that gap. So here's Amazon. And keep in mind, it's not like the S&P and NASDAQ have been roaring higher over the last week and a half. They've been chugging. They've been a little bit all over the place. But look at Amazon. It's gone right up and filled that gap yesterday. So let me pause here real quick and make sure this makes sense. When an overreaction happens and then a stock closes back within that gap, it tends to close that gap. So here's our gap. Closed within the gap, ran through it. Are you guys getting an echo? I'm hearing. All right, I'll give the chat a second here. I know it's a little bit delayed. Okay, sound is good. All right. So today, we're going to talk about these gap opportunities. So you can see this one here on Amazon. Here was another one I found that was a good example. Qualcomm earnings. It took a little bit longer. Actually, this gap, if you're playing the high and low prices, it's going to be a little bit tighter, but you can play the body of the candle as well. So it closed here above that body, the open of the gap down, and since has gone on to fill that gap. You can see here, if you're trading body to body, it filled that gap today. Qualcomm did. And keep in mind, 153 to 159, that's about a 5% move on the stock in 3-4 days. Let's look at another example here. Here's Carvana to the downside. Big gap up. Next day, closed within that gap and went on to fill it here on the 12th, so Tuesday. So again, you would have entered right around here. I typically wait for a close, which today markets are about to close, so it's good timing. 368 to 336. It's about $30. It's about 10% on the stock. Options obviously pay a little bit better. So with that said, let's look at a couple of stocks that are looking to fill their gap right now. And the first one is one that we talked about this morning, Eli Lilly. You can see here, big drop, big emotional reaction on their earnings report. Obviously, they had some issues with their weight loss drug. I'm not saying Lilly's a buy and hold from here, although I do think it's a good stock over the next 5-year outlook. But for the near term, you can see yesterday, it closed above that gap. So gap down. Here's our body price, 675. Closed yesterday, 680, above that gap. So yesterday would have been an ideal day to go long on Lilly. Now, with that said, it's up today. It's up 2.5%. But if you can see here, the gap doesn't close all the way till 745. And if you want to play the tail here, it's 740. So we still have about $40 of room to run here on Eli Lilly, which is about 5%, a little over 5% on the stock. So what I'm going to do here is I'm going to place a trade. I'm going to give it a full month. Actually, I might not even give it a full month, but if you want to, I just did this one actually. I gave it a full month to close the gap, but that's a lot of time there. I would not be shocked if we see it close next week. So let me give you a speculative play on Lilly, which again, we all know speculative means high risk, high reward. And then I'll give you a more conservative one as well. I let Nate know in regards to automated options. He says, oh, he's got to fix the strikes must have been an error. He's working on that now. All right, so let's look at Eli Lilly here. And let me type this up for you guys so I can post it in the chat. Trade sheet.
Hey, while Graham's doing that, folks, can you let me know if the screen looks clearer to you now than it did on previous broadcasts, particularly this morning? We upped the resolution on the broadcast. I'm just curious if you can read the screen better than you usually can. Thanks.
Oh, good. Good. We're doing everything we can to try and make it as good of an experience for you as possible. All right, so a speculative trade here would give it a full week to close the gap, which, as you can see at the current trajectory, is not out of the equation at all, right? Lily's kind of on this path. We're going to give it till here to get above 740. So let's go ahead and look at the options market here. And I'm going to have to open up some strikes for us, which is fun. That means probably a pretty juicy opportunity here. Let me just check the prices. All righty. This is going to be a fun one. Again, speculative means high risk, high reward. There is a decent chance this does not work out. Keep that in mind. So I'm going to look at next week's expiration on Lily, and I'm going to buy the 735 call, and I'm going to sell the 740 call. That's our gap. Right now, this is trading at a net debit of 64 cents, and it's a $5 width spread. So $5 is the most we can sell it for. Let's say we enter for 64 cents. Look at that. 681% return week over week if this works. Do you see why I'm calling it speculative? 681%. Now let me just make sure that this is all right because that number seems astronomical. But it is accurate. All righty. Let me post this one in the chat. This is our speculative trade. Again, if Eli Lilly doesn't get there, it's not going to make money. Even if Eli Lilly gets to 725 by the end of next week, this will lose. We needed to fill that gap. So let me go ahead and get 5 of those because that's a pretty awesome trade. You can see P&L risking $340 to make $2 grand. Filled right away. 68. I didn't move my price. I wonder if that's an error. I'll have to go look at my statement after. So now that I'm in on this, I just went and got 5 of them. I'm going to go ahead and set an automated target up to close it when it hits, to close some of the positions when it hits 300%. So I'm going to do my entry price. I want to sell it for 256, and I apologize. In the opening playbook, we would go slower. We'd go through the calculators. We don't have that much time here, so I'm going to do the math for you. I'm going to set in automated price. LK says, bad idea. Don't take it then. Be my guest. Again, this is a speculative trade. 256. I'm just going to sell it back. I'm going to do 3 of the contracts at 256. I'm going to set it as a limit, good till canceled, so that if this price does pop up, it will take profits there. Now, the most this can be worth is $5. So this is only about half that width, but I'm going to throw that out there. Yeah, the market maker move is $28. So the market is pricing in a $28 move on Eli Lilly over the week. So this is what the market makers are pricing in, which is probably why these options are so cheap, which is an advantage to us in my opinion. I mean, let me pull up this. If we look at the ATR after earnings, because it spikes after earnings, the ATR is at 28. So this, look at before earnings, it was at 20. So the ATR spiked almost 50% here for Eli Lilly. And I'm guessing the market makers probably had a similar pricing in this week. And look, it went from 647 to 700. That's a $50 move. Guarantee you, market makers probably lost this week because it outperformed the anticipated move. That's what we're going for here. All right, now let me give you a more conservative bet on Lilly. And you can give it more time. But let me just see what the volume's like here. All right, let's just use the same weekly expiration, but let's just tighten up that. So LK wants to go for the market maker move. Let's go just under that. Check this out. If you want to do the gap fill on Eli Lilly and only go for half the move, a little less risky, You would buy the 715, sell the 720. It's currently a $1.48. I'll post this here in the chat. It's at a $1.40. Our max value here is $5. So there is a 257% opportunity if, guess what? If Eli Lilly underperforms the market maker move. Market maker's anticipating $28 move. Well, this one only needs a $20 move to make 257%. So let me show you visually. 822. Here's 720 right there. Looking at the last few days, who thinks this is totally out of the equation for Eli Lilly to get above that price by that expiration? This is 1 week out, John. If you wanted to, you can add. I did one personally just earlier before jumping on that gave it way more time. But here we're going to go for a pretty quick gap fill. So if you take this one again, above that line by this time, you make 257%. Market makers anticipating $28 move. We're going for 20. It's a vertical. Yes, Pat. All right, let's look at another gap fill here before we run out of time on the day. Desert Fox says, I'm going too fast. I apologize. These closing playbooks are much quicker than the opening playbooks. Opening playbooks, we got a full hour to walk through everything in detail. Here on the closing playbook, we're just firing off trades. All right, Shopify. Remember, gaps can work both ways, upside and downside. So be on earnings. Here's our gap. Yesterday it closed below that gap, which means today would be a viable day for entry, in my opinion. Now look, the gap comes all the way down to 126, 127 on Shopify. That's a pretty big drop, $13, $14 move. So this one, we'll give it some more time here since we did a pretty tight one on Lilly. But this one, just looking at the current trajectory, and again, I would do a much deeper analysis if we weren't just firing off trades here, but 9.5, September 5th, seems like a reasonable target for this one, given the current trajectory. And if we do get a market, jolt to the downside direction, this will probably happen a lot faster. But let me just look at the 15th expiration and do the options prices just to give us a little more time here on Shopify. Or excuse me, the 19th expiration. And again, our gap is 127. So let's go a little safer, 130. Good pricing here too. So this is going to give us a full month for Shopify to close that gap to the downside. Again, if we do get a little dump in the markets, this would probably happen much quicker. So it's going to be the 19th of September expiration. I'm going to buy the 135 put, sell the 130 put. It's currently trading at a $1.40. I'll post this in the chat. Tell me if I made an error, but I think that looks good. Again, that gives us all of this time. And 130 is our strike, so we only need it there. 19th of September for it to get below here. To fill that gap. Fills it all the way even better. So it's trading at a buck. We'll call it a $1.40. Keep it easy. Our max value is $5. So we're going to win for 257% return here. Not bad. And LK, you may like this. That's exactly the market maker anticipated move as well. Actually, we're trading slightly under that again. So I'll get two of those. Filled right away at 139. Can't complain. Desert Fox, if you rewatch this on Monday, can you execute it then? It just depends. You can definitely take the trades. There will just be different prices depending on what the stock move is. Now, let's say here on Shopify, you want to set an automated target to take a contract or maybe all of them off the table if it doubles. So I entered it as 139. I'd just call it 240 for simplicity's sake. So if I want to close out for 100% winner, I'm going to set a target at 280. Market good till canceled. So again, double my entry price. And again, that's only about half the width of the spread. So really not asking much here. I'll go ahead and ship that one off. So then one of my contracts will close if we get a quick dump on Shopify. The first trade on Lily, I did a 300% profit target, I believe. Let me just tell you. Close all these up. Boop, 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 boop. All right. Shopify, Lily, I did 256 profit target. All right, I've got one more for you. We got 5 minutes till the markets close. Again, these are all speculative positions, but we're trading the gap fill phenomenon. And the reason I like that right now is because the markets are unpredictable. I do expect a quick drop here at some point. But even if we get a drop, a stock like Lily may not be affected too much by it. It's going to be names like NVIDIA, Microsoft, Shopify to the downside, the high-flying names. How are people getting but 735 and sell 750? So I'm not exactly sure what you mean, but there you go. You got Lily pop in the news flow scanner. Nice. Gotta love a little double conviction here. All right. I've got one more for you. Actually, there may not be much juice on this squeeze, juice left to squeeze out of this one, but we'll take a look at it. I'm going to tighten up the expirations. This is AMD. And again, I like AMD right now. It's a great stock. But if you wanted to trade this gap fill to the downside, here's how that might look. And keep in mind, actually, this is a great example. This is why I wait typically for a close below, because if you traded AMD and you just triggered the second it went below, you would have entered here and then probably been stopped out. It never closed below this gap. This was a few weeks back. But now, here you can see another gap fill. Now we had this gap just the other day. Here's our price. We are closing below it today, 177 to 175. Not that big of a gap, but with the options here, we can use next week's expiration, and we can just do what I call a wrap order. And the price is slightly out of it, but actually this is a great one because this one will tell us if it goes flat this week, we won't lose anything. We'll break even. So we got 3 minutes left. Let me type this rapid fire speed. We're going to be trading the puts to the downside on AMD. And this is going to be a 1-to-1 risk to reward ratio. And I'll walk you through in a second. We're going to buy the 180 put, sell the 175. It's currently at 246. There you go. I'm not going to use a profit target here. You can if you want to. I'm going to let this one ride for now. Maybe that'll change Monday when we meet again at the opening playbook. Filled right away at 246. Now my profit here is 103%. 103% profit potential if by the end of next week, wow, even more time, by here, AMD is below my line. And if we get a flush out in the markets, it would probably get below that quicker. All right. Now, what's really cool here is the options I just selected. It was the 180 strike and 175 with the price where it's currently at. If AMD goes absolutely nowhere this week, doesn't move $0, it finishes next week at 177.68, we will actually be right at around break even. We would be down. It closed for 232, right around break even from our entry price. So the really cool thing about the way we trade these debit spreads is a lot of the times when you're close to the money, when you're in the money, at the money, we offset the time decay. So if you're trading basic puts here, AMD goes flat, you lose everything. If you're trading the wrap order, like here, we can double our money. If AMD makes a tiny move, it's got to drop $2 this week. We double our money. And if it goes flat, we save ourselves. The aggressive trade for Lily was next week gap fill. So it's buy the 735 call, sell the 740. My AMD filled right away at 246. It shows 248 right now, 246. $251. Let's see, maybe it's probably because AMD just dropped. Is why that price is going up. The exit price on the Lily trades, if anyone remembers, can you post in the chat? That'd be awesome. I think it was 256 for the speculative one. And for the 715, 720, you could do a 100% target at 296. But guys, I'm just going to talk through this now. Markets are about to close, but that's okay because you can still set your targets after the close. So now we can talk about targets. And I've got 2 more stocks for the watch list for you guys. All right, in the opening playbook members area, remember, hopefully you all have this for $1, a whopping $1 VIP. Target assistant. And Nate still needs to make the put version of this because we'll only be able to talk about the call ones today. So let's say you took that more conservative one on Lily that we just talked through. I'll punch that in. It's okay that markets are closed. We can still set a target. So we bought the 715. We sold the 720. Entered at 148. Let me just clear this out. So if you use this, you can say, all right, if I want to go for the max value, I don't think I did 5. If we go for the max value, 2 contracts, actually, let me just make it 1 to be easy. Max value, you risk 148 to flip it to 500. All calculated for you. That's a profit of $352. If you want to set an automated target to get you out earlier, well, there's some, just base targets in here that you could use, 25%, 50%, 75%. Let's say you wanted to set a 100% target. The calculator does that for you. It says, okay, you want to do 100% ROI. This is the limit price to use. And you would set a good till canceled exit order. So Desert Fox, you would just go to close your position, set the price at 296, and mark it GTC, which means good till canceled, or in other words, the order will stay open until filled or expiration comes.
Hey, Graham, do you want, while you're on the screen, you want to go over real quick, just kind of like how the max profits determined by the width, but like the risk and the percent ROI is on the cost?
Yeah, and I still need Nate to make the suggested updates. He's been promising me for weeks now that he will do it. I don't know how to edit these.
Yeah, he's working on so many little tools and apps,
No, we don't give him a break. We don't let him off the hook. All right, this is the old one, the spreadsheet version I made for you guys a while back. Here, this will walk you through the percentage. Let me just enter that same information in here. All right. So this tells us our max percentage gain potential. So 1 contract here, we're entering at a $1.48 debit, so that's our risk. The most we can lose is $148. And then the width here is $5. So the most we can sell it back for or close it out for would be $5 at expiration. And our profit will be $5 minus what we put in, $1.48. That's $352 a contract, which comes out to 238%. I've got a full hour-long training on this. It's in the members portal for you guys to check out. If you go to the members portal and go down here to wrap order class and jump trades masterclass, both of these would be good for that. And also we had a question here. is there a good class for how to set automated exits up? Right here. It's in the members portal. Watch it over the weekend, have some fun, eat some popcorn.
And for the people that are newer and like this moves too fast, like we totally get it. The closing playbook is really a fast moving session. We've got a limited amount of time to get orders in before the market closes. The opening playbook, we have more time to sit back and do like a slow, methodical education on, lesson on something. But really, the place to really learn it, if you don't know it, it's in the training that's in the members area, whether it's the dollar membership area that Graham's showing you right now, or whatever program you're part of. That's where you want to go when you want to take like the basic options class. You want to take the class on the particular program you're in and really, learn it that way. So when you come here, you kind of have a baseline. And then if it's still moving kind of fast for you, just pick one of these trades. Go slow, enter it correctly, double, triple check it if you want. Don't worry about the next trade that's coming out 2 minutes later. Just get one trade in the closing playbook if that's all you can do in a reliable way. And then a few weeks from now, you'll be able to do two in a closing playbook. And then, 2 months from now, you'll be able to take them all. You just got to ramp up and just get used to it. Don't have fear of missing out on these trades. If you weren't here at all, you wouldn't have gotten any of them. So if you get one, it's great.
Yeah. And LK focus on trades only. Yes, that's the intention of the closing playbook. We're just trading live together. The morning session is where we do the full breakdown, the full trainings, walking through everything. And of course, there's recordings and there's the master classes posted in here as well. Is it possible to start earlier? If I had nothing else to do in the day, I would be on all day with you guys. Nate and I are very, very busy people, so we do the best we can. In fact, already this closing playbook has put a little wrench in my schedule where I'm finding myself having to squeeze other things around it. So promise here I'm doing the best I can for you guys, and Nate is as well.
Yeah, it's tough for these guys who, they have a lot of end of day, programs that come out right before the market close, like between 3 and 4. So they got to make good on those programs as well as be here for us. So it's tough. It's tough. Give them a little grace. They're doing
great. And
are the trades, not just trades. So
just having too much fun. Are these trades still valid Monday? They aren't. You still will be able to enter these strikes. The prices will change. I don't know if Lily's going to go up over the weekend or down. I can't predict that. However, depending on the movement, you could still get filled. One good day trade said, I'm new here. Never heard of you guys before this. What's the website link? I'm assuming there's an expensive membership fee, correct? Well, does anyone here want to share with our good friend here the expensive price of the membership fee for this?
I actually posted it a minute ago.
Okay.
I posted the link. If you go up to my 4 p.m. post, it's a whopping $1.
Yeah, and you might say, what's the catch? And I don't know. We probably should have thought through that first. What is the catch? There is no catch.
Right. Well, I mean, we were going to do it for free. We just couldn't get it in the members area without charging something, right? Yeah.
So it's $1 for lifetime. Yeah. It's one-time payment. You never pay again. We just had to get a single charge in so that we could get access here in the portal.
We should have done the portal for free and charged them $1 per minute of opening and closing playbook. That's what we should have done.
Yeah. What a rip off the $1 membership. It's funny. Awesome. Okay. So now that we've done that, let me go ahead and talk through a couple of stocks you may want on your watch list to apply this gap fill principle. And let me pull up my notes I had again. All right. First one is Novo Nordisk, which is similar to Eli Lilly. They're competitors. So Novo had a big gap down here. All right. Here's where we're at now. So gap down, closing price, we'll call it 54 for simplicity. It's at 52.40 right now. So I would right now just write down NVO or add it to your watch list. Again, ticker is NVO. There you go. And if we get an NVO close above 54, that could be a potential gap fill. Now keep in mind, this is no small gap here. That's $54 to $68. Again, just trying to keep round numbers here. That's a 25% return on the stock. Now, I'm long this stock right now for that very reason. 25% return on the stock. With the options, I'm sure it would be astronomical. I'll post those trades again. So NVO is one to add to your watch list. Again, we don't. You can do whatever you want. I personally don't want to enter this early. per se. I want to wait, if I'm going to trade options on it, for a close above that price. If you want to be even safer, wait for a close above the tail, 55.39. If that happens, there is a good chance that it will close that gap, or at least make 70, 80% of it, at which point, if you're using a profit target, you can get that hit as well. All right, the other one on the watch list for you guys, and this one's to the downside, and it's a stock that we've been making money on. It beat me in the face back here. But ANET, this is one that tends to be a quick mover, in the sense that when times are good, this thing is gaining steam. When times get bad, this thing falls out of the sky. ANET, big gap up on earnings. Been a great trade for us. Had a tail below the gap here, but not a close. If we get a close below 133.68, so if we get a close below this gap, this could fill to the downside. That's 121. So 133 to 121, that's what, $12. It's about a 10% move on the stock. So again, keep these on your watch list. NVO upside, ANET downside. And if we get if the Nasdaq does sell off at some point in this month, unfortunately, our good friend ANET is probably going to be taking the brunt of that blow, which is just more fuel in the jet if we do trade a gap fill here. What is the gap to join? You would be looking for a close below this price. You could use the tail, 133.50 to call it, just to make it easy, 133.50. ANET closes below 133.50, game on. Yeah, Bob, I think they're both really, really good for the long haul. I know Lilly had some issues with the testing, and that's why NVO may see a little more steam in the near term. But Lilly is a great company. Desert Fox, would you do a straight put? You could do a straight put. You could do a spread, which again, we cover the spreads in the training. Nate and I love using the spreads, especially on a big mover going out of the money a little bit, because in my opinion, and based on the numbers, the risk to reward is so much better. But I will let you do what you deem best. And you can always bring it up here again, guys. If ANET's below this line and I forgot about it, bring it up in the opening playbook, closing playbook. We'll look to trade it together. All right, market maker move. Question here, how can you see it? This is an easy way to see it. However, if you look at the options chain, you can see by expiration. So by next week, ANET's market maker move, plus or minus, we'll call that $5 for simplicity. Following week, 8.7. Yes, you could do wrap orders on them. The reason I went out of the money is because we are looking for a move. So in my opinion, we can go for a little more bang for the buck, but wrap orders would be a safer way to play it. These are not naked trades. No, these are spreads. So we always are risk defined. And then we have a question on what happens if you get exercised. Well, on a credit spread, that could be a little bit scary because you have to do some unwinding. On a debit spread, if you wake up in the morning, they say you've been exercised, we did Lilly. If you've been exercised 100 shares of Lilly, that is, at first, you might be spooked because you're like, wow, I have so many Lilly shares. This is a little scary. But all you do is you just exercise your side. So like down here, let's say AMD, or here, let's go to Lilly because that's what I was talking about. Oh, you can see I've got a lot of trades on Lilly. All right. I don't know why I can't make this bigger. There we go. So if this one were to get exercised, I would just right click here and exercise mine. That's just going to offset it. And what it's going to essentially do is just give you a max profit. So if you get exercised, that actually ends up being a good thing because you guarantee a max profit by just exercising your side. So hopefully that made sense. How wide of a spread is practical? It just depends on what your underlying strategy is. So options are a way to leverage an underlying strategy. They're the way to apply what is your strategy. So like for me, with these gap fills, we know our strategy is to see that gap close. So that's how we select our strikes based on what that gap close is, the price at the close. with my program like Perfect Income, for example, which just bets on stocks to drift higher week over week, where we don't need a huge move. We only want like a 0.5% move or better in a stock, which really is not much for a good stock. Well, then we go at the money with what I call the wrap order, where we're able to get a 1-to-1 risk to reward ratio on a stock barely moving higher. So like this week, we did on Apple, entered on Monday. Apple didn't really move higher this week. Let's see, 228 to 231. $3 move went 1.5% higher. If you did the wrap order and let it expire, you doubled your money here. The call options probably lost money. I can bet you money that the weekly call options lost money. But the wrap order, because we know our application for the options, going at the money, letting it drift, we had a chance to double our money. And a lot of you guys are asking about the wrap order, explanations for that. We're actually going to pull up the strategy, the Perfect Income strategy behind the wrap order. I call it dollar options because normally we enter for about $1. So $1 risk, whereas normally, Apple call options. Let's go look at Apple call options. Next week, $200, $400. You go the month out, $500, $800. With the wrap order, we're normally entering for about $1, $1.25 normally. And if that stock just drifts ever so slightly in the direction of our favor, a lot of the times that's between a 0.2% move to 0.5%, very, very tiny move, or better, we double our money. So Apple this week could have gone to the moon. We double our money. Could have gone here. We double our money. Could have gone here. We double our money. It could have even gone to 230 and we doubled our money. That's a beautiful thing about the correct options application on the strategy. In fact, I showed you guys in Telegram earlier this week my trade on Google, and I showed you the difference between buying calls and using the correct options application. By buying calls, it was up 41%. That's great. No one's going to complain. By using the correct options tactic, and I say correct, that's my opinion, we ended up with a 177% gain on Google. There you go. Nice job. So again, 40% or 177%? What do you want? The 40% one costs more to enter. The one that I just did 177% on Google costs 90 cents to enter. So you can see why I call them dollar options. They're very, very cheap, very affordable, and we do not need a big move in a stock to make 100% return on investment. So Dave, if you don't mind, let's go ahead and pull that up now so folks can get a little bit better glimpse of what these wrap orders are all about, how we're able to double or shoot for doubles each and every week on a small move in a stock. And keep in mind, guys, we do it each and every week. Not every week wins, but over time it's stacked up very nicely. So please pay attention. If you're interested at all, there will be a new trade on Monday morning. So if you would like to take a shot at a double next week on a stock moving ever so slightly in our favor, please pay close attention to this, and I will give you a trade on Monday morning with the other members as well. We'll do it together just like we did it this week on Apple. Not that pretty of a move. Double your money. So stay tuned for this right now.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings because, of course, you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not back tested, not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's that average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely move. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity Pub and you can read all of that. So welcome. If you guys don't know me, I'm sure you do. I'm Nate Tucci. I'm the publisher here at Prosperity Pub. And when most folks are paying, $500,000 or even more to trade popular stocks like Apple, Nvidia, or Google, one Florida-based trader discovered a new way to tap into what could be some of the most cheap options in the market that you can take advantage of. Trades costing right around $1, right around a good George Washington there to get in. And with this unique trading method, he's been able to watch as these trades double in just a very short move each and every week. In fact, over the last 18 months, he's already done it 58 times, including multiple doubles on some of the stocks I just mentioned, like this dollar trade on Apple, which cost $1.24 to get in and paid 101% ROI by the end of the week. Or is $1 on NVIDIA, entering at 120 per contract, pretty cheap way to trade NVIDIA, and banking 108% by the end of the week. And then we had this dollar option on Google, which traded at 46 cents per contract and paid out 117% by the end of the week. You see, these money doubling opportunities on the dollar options are all thanks to a little known trick to rig the options market. And yes, I actually mean rig. It's a trick that very few people know exists. I'd guess that less than 0.01% of traders have ever taken a trade. As a matter of fact, I personally work with dozens of trading experts. I mean, a lot more than that in the last 10 plus years in the financial markets. But I had never heard of it until my special guest shared it just recently. Honestly, when he first told me about this, I didn't believe him. I didn't even think it would be possible to trade the market this way, because he claimed that unlike most options trading methods out there, where you need a stock to move 5%, 10%, sometimes even more to double your money, by rigging the market with these dollar options, we're able to target right around 100% ROI each week, even when the stock barely moves. That is my favorite part of everything you're going to learn today. For example, take a look at what happened with one of his trades on Apple. So during the week of June 24th, Apple is chopping around, going nowhere fast. We've seen Apple do a lot lately, and the stock gained 1.1%. Now, most investors would make next to nothing there, and option traders were probably hoping to break even on a 1% move. But with the dollar options, each one costs about $1.21 per contract to enter. Folks could have made 106% by the end of the week. Now, guys, does that chart look like a 106% gain chart to you? No, most people are not making 100%. The price of Apple barely budged from June 24th to June 28th, which would have been enough to turn $500 into $1,033 on that chart, or $1,000 into $2,066 for the week. Then the next week, he did it again. If you set your trade with him on July 1st, when he sent out the alert, folks would have gotten in for about $1.25 a contract. And again, watch as the investment more than doubled in a single week, enough to have taken $1,000 and turned it into $2,250 in just a couple of days, or $2,500 into $5,630. And keep in mind, these trades I'm showing are not tests. They're not a theoretical opportunity that you look back in the charts and could have found. Each and every example I'm sharing are from his live trade tracker, which he's been sharing in real time. Like the very next one, again, going for a double on Apple. This time, this was during the week of July 8th, going back to last year. Apple only moved about 1% that week. Again, most investors were probably falling asleep at the wheel, and option traders were starting to panic as that time decay is eating you alive. You're not making any money. But with this unique way to rig the market, by using the dollar options, anyone could have followed along, paid $1.11 per contract to take the trade, and automatically cash out with a clean 100% ROI for the week. Once again, guys, does that look like a chart that you should have been able to make 100% on Apple? I don't think so. Common shareholders were left with pennies that week for every share. Now that 3 weeks in a row from real-time published trades where you could have doubled your money each and every week, and you didn't need the stock to make a big size move to see it happen. Depending on how much you want to start with, let's say $500, $1,000, $2,500, that would have been a shot, and this is just in those 3 weeks, to grab $1,659, $3,318, or $8,296. That's not even compounding. That's just $500 in each one, $1,000 in each one, in under a single month. Now, while that might sound too good to be true for some of you listening right now, let me reassure you, that is as real as it gets. He's been sharing these dollar options with a whole group of students just like you. And here's what they've been saying. Ken, 100% gain on Apple in 5 days. Greg said 1,040, 100% gain on NVIDIA tomorrow, starting with about $1,000 on that one. Ben, who saw winners with his first couple of dollar options, said my first 2 trades were both 100% in a week. And then Ed R., who had 4 trades, said this is the only trading methodology I use now. My winning trades for the week: AVGO 120%, SMCI 121%, Meta 90%, NVIDIA 109%. Or Richard said, hey, Graham, being conservative, I made $2,820 in the last 2 weeks with those dollar options. Loving it. Or Jim T said, I love so far. I've made over $5,000 using this strategy. Guys, these are from people who are not used to making 100% gains. They thought 100% gains were few and far between. And now they're hitting them on a regular basis because of this style of trading. And so today, my guest, I'm sure you probably know who my guest might be, is trying to bring on 50 new students to take the next dollar trade opportunity with them. So if it sounds like something you'd be interested in and you'd like to get in on the next dollar option, hang tight, because over the next few minutes, he's going to walk you through exactly how they work, why almost no one has been able to crack the code on these dollar options before, and the key insight that he's discovered that now allows him to rig the options market like he's the house at the casino, plus how to get in on the newest dollar option today. Yes, today. So welcome to Dollar Options. Thank you for being here. Like I mentioned, my name is Nate Tucci. Over the last few years, I made quite a name for myself by producing some of the top winning strategies available, like 77.7% on my overnight option. I'm sure most of you guys know about that one. 80.5% on two-way options, actually a little bit higher now, but who's counting? And then 100% win rate so far on the weekend income strategy. But if you follow my work, you know what I'm focused on. What I care about isn't the next moonshot AI stock. It's maximizing the bang for your buck in a systematic way. And that's exactly what the dollar option delivers, what it's all about. Not only are they very cheap to get in on, but they show the power to pay a 93.6% ROI on average each week they work out. Like I said, most folks are not used to hitting 100% on a regular basis. But if you want to get used to that, then I would focus on this presentation very closely, because those are based on real-time results. Now, with results that good, it doesn't take a genius to realize how quickly that can scale an account over time. In fact, with the dollar options shared with folks like you and me in real time, guys, this is including winners and losers from his real track record. Someone started with $2,500 and never compounded a penny, just took every trade without compounding. They would have already seen $70,394 over the last 18 months. Let's give a little bit of a round of applause for $2,500 to 70 grand in the last 18 months of real trading. That is not something you see every day. That's net profits and losses